Anijie Global Foundation is a youth-led non-profit organization that empowers women and youth through educational and leadership development programs. And our mission is to drive positive community impact and to contribute to global progress. So today's online event is one of our masterclasses that we do monthly here at Anijie Global Foundation. And this masterclass aims to bring together global changemakers, industry leaders, and emerging talents to help shape the next generation of African leadership. And through these interactive sessions, we bridge the gap between aspiration and achievement, theory and practice, and then challenges and solutions as well. So without wasting much time, I'll be honored to introduce our distinguished speakers for today. So I think our first speaker is Mrs. Mimi Anane-Appiah. Mrs. Mimi Anane-Appiah is the co-founder of Investment Friend, an online financial literacy program, a platform, dedicated to improving financial knowledge and helping individuals, especially women, make informed money decisions. She brings over a decade of experience in the finance industry, having served in various strategic and client-facing roles. Ms. Mimi currently works as the business development manager at a leading fund management company, where she oversees the growth of the retail business, including collective investment schemes and the wealth management unit. Her responsibilities span sales, relationship management, product development, management, and customer service. Previously, Mimi was the team lead for the education and advisory department at a leading corporate trustee, where she designed and implemented impactful financial education initiatives, such as Smart Money Talk on Sunny 88.7 FM, Pension on the Go, and the Access Pre-Retirement Seminar. Passionate about leadership and empowerment, Mimi also mentors aspiring African leaders through the Central Leadership Program. She holds an MBA from Webster University, a BSc in Banking and Finance, and certification in Financial Education, Wealth Management, and Project Management. Ladies and gentlemen, if that is not inspiring, then you are at the wrong place today, because that's a packed and loaded portfolio right there, and I'm happy that we are all here looking forward to learn from her. Okay, so I would go forward to also read the bio of our second speaker, who is in the person of Mrs. Seyram Ofori-Atta. Mrs. Seyram Ofori-Atta is an investment professional with over a decade of experience in financial advisory, pension fund management, grant administration, and financial inclusion. As the Access to Finance Lead and Investment Manager at Tempo Investments, she specializes in blended finance models and has structured multi-million-dollar donor initiative. Passionate about wealth creation and personal finance, she has trained 2,000 plus people in financial management and investment as a certified financial education instructor. Mrs. Seyram holds an MSc in Industrial Finance and Investment from Kwame Nkrumah University of Science and Technology, and she's the co-founder of Investment Friend, a financial literacy platform across social media platforms, and she's also a wife and a mother of two beautiful boys. That is also an amazing portfolio right there. So without wasting my time, I would invite our first speaker, the person of Mrs. Mimi Anane-Appiah, to start her presentation. But before we do that, I would like to let everyone know that if you have any questions, please jot them down. Please do not put them in the chats while the presentation is going on. Please jot them down, write them somewhere. At the end of the presentation, there will be some time for Q&A where you get to ask the speaker all your questions. So please avoid putting any questions in the chat box, and then wait until the end of the speaker's presentation, then you can ask your questions. So ladies and gentlemen, I would like us to give a beautiful and warm welcome to Mrs. Mimi Anane-Appiah to give us a presentation for the evening.
Good evening, everyone. I hope we are all doing well. Yes, so thanks for the opportunity. I'll share my screen. Kindly enable it to share.
Yes, please. Albert will work on that for you.
Okay, thank you. Okay. Okay. So can you see my screen?
Yes, please. We can see your screen. I hope
Okay.
everyone else can see as well.
Okay. Okay, just a minute. Okay. Once again, good evening, everyone. Like I said earlier, thanks for the opportunity. Sorry, just a minute. Just a minute. Okay, once again, good evening, everyone. Thanks for the opportunity. We'll be touching on a very important topic. Let me know if you can see my screen.
Yes, we can see your screen.
Okay. So today we are going to be talking about financial literacy and economic empowerment. And basically, we are looking at the skills, building skills to thrive in today's economy. And as you already know, or you may already know, Seyram and I form the investment friend. So we will be handling this presentation. I'll do the first part, and then Seyram will do the last part. Investment Friend basically is a platform that helps people, especially women, take charge of their money and work towards financial independence. Well, we are women, so forgive us for being a little biased, but we love to teach people about money. We love it when people meet their money goals. So if you are not following us or if you are not following our work, then you are really missing out. So before this call ends, make sure you are following us on TikTok, you are following us on Instagram, and we're also on LinkedIn so that you can see the work we do and benefit from it. So, like I said, today we are going to talk about financial literacy. So, before we dig deep into the tidbits, let's find out what financial literacy is and why are we even on this call at 7 p.m. when we could be sleeping. So, one of my favorite definitions when it comes to financial literacy is by OECD. And they define financial literacy as a set of awareness, knowledge, skills, attitudes, and behaviors. Realize that it's just not being aware or just not having the knowledge, but you also need to have the right skills, right attitudes, and right behaviors. Okay, necessary for individuals to make informed and sound financial decisions, all this contributing towards their financial well-being. I know most of us have spent years, 20 years, some of us are still doing our PhD, we have done all sorts of courses, and most of these courses we are doing is basically to help us to learn how to earn money or give us skills to earn money. But it doesn't end there. Financial literacy is just more about earning and spending. No, it includes budgeting, savings, etc. So let me talk about the core pillars of financial literacy. Like I already mentioned, even though earning is not the only thing, earning is very important. Money or income is the lifeblood of your financial life. So that's very essential. So one of the core pillars is your earning, or what we call earn, you know, knowing how to generate income and how to grow your income sources. That's very important. Another pillar is spending, knowing how to spend. How do you live within your means? How do you make sure that you don't get yourself into debt? How do you make sure that you manage your money well to meet your needs, to achieve the life that you desire. So spending. It doesn't end there. We talk about savings. That's also another very important pillar for you to. Oh, you're not seeing my slide? Is it move? Okay, I should. Just a minute. Let me share my screen. I think that will solve this problem. Sorry about that. Is it better now? Can you see?
Yes, yes. I think now, yes, we can see it.
Okay, great, great. Okay. So, like I said, it doesn't end with earning and spending. If you are just earning and spending, once the earning ends, we are all in trouble. Okay, so there's a need to save, to build cushions for emergencies and short term goals. Remember that savings is not investment. So, another pillar we have is investment. And here is where we grow money, over time. And we do this through owning assets. Then the last pillar is where insurance comes in. It's also where retirement comes in, because we are basically looking at our future when there's no income, and building tools so that we safeguard our future. So these are the main pillars for your personal finances, and we'll talk a bit about that. Now, why, like I said, why are we sitting here on Saturday at 7 p.m. when we could be watching a movie, maybe with some popcorn and ice cream, talking about financial literacy? Because whether you like it or not, there's a scripture. Also, we realized during COVID that a lot of households, can you still see my slides?
No, not at the moment.
Oh, what's happening? Okay. Let me reshare. Okay, I hope we can see now.
Yes, please.
Yes, during COVID, one of the things that we noticed is that for a lot of Ghanaian households, once income stops, even if it's for 1 month, people struggle to maintain their standard of living. So that's also something that we really need to work towards. Also, it helps us take control of our money. Always remember this: money is a tool. Money is just a tool to help you live the life that you want. So, by having basic knowledge of money, being aware of money, having the right behaviors, having the right attitude, you are able to take control of your money through budgeting, saving, investing, to ensure that you escape poverty. Number two, by doesn't number one, but it doesn't just end there. You thrive financially. So this is just a little quote to remind you that financial literacy is not an option. Unfortunately, we all need money, to survive. We all need money to thrive. So it's not an option. It is the foundation of survival and growth. Now that we've cleared that, I hope that we are all convinced that we are at the right place. Let's talk about money mistakes we have made. And this is not to shame anybody, because trust me, I've made huge money mistakes. But just so that we are aware of, why we make these money mistakes. What are these money mistakes? How may they cost us, so that we can be more intentional about our decision making? So what are money mistakes? They are basically poor financial choices that can affect your financial stability or overall well-being. Sometimes you hear stories about people who were doing so well, took one bad money mistake, and then everything went downhill. Sometimes to the point where maybe they died or their children suffered. I know I've heard stories like this. So our purpose is to throw light on these areas so that you avoid, them. They can drain your resources. They can cause you unnecessary stress. I don't know if you've lost money before, or you've been broke before, but it can be a very stressful situation. It can even delay the achievement of your important life goals. So imagine that you wanted to marry, or you want to marry in 6 months, and you invested your money somewhere, that was risky. You didn't do your due diligence, you didn't understand the investment, you invested it somewhere that was risky, and you lost the money. You would have to postpone the marriage, of course, if you still want to do it the way you wanted to do it. So just to bring life to what we are talking about, okay, they don't happen by chance. It's normally as a result of inadequate financial knowledge. That's the reason why we have to invest in improving our financial knowledge. It doesn't even end with only knowledge. Like I said, limited practical skills. So but you haven't been doing it. You understand, not having the skill sets can also get you into trouble. Sometimes negative habits and behaviors will come into all that, like impulse buying. Nowadays, that you can easily buy things on your phone with an app, very dangerous if you're a shopaholic. Okay, now, like I mentioned, the root causes are inadequate knowledge, not understanding basic financial concepts like budgeting, savings, investing. Sometimes we understand, but we don't even see the value. What value does it add to my life? Lack of relevant skills and inappropriate habits or attitudes and behaviors are some of the reasons why we make bad money mistakes. How do they affect us? Lost opportunity. Okay, if you make some mistakes, can cause you lost opportunities. Financial stress, this is the one that I hate the most. I just hate being stressed financially. Reduce productivity. When you are broke, you are not productive. I don't know about you, but you are not productive. Okay, low self-esteem. Sometimes what you've done, you can't even open your mouth to talk about it. You feel shame, you feel regret, you don't want anybody to hear about it. Decrease net worth. When we say net worth, we are basically saying your assets, everything you own, okay, plus your minus your liabilities, everything you own. Oh, so everything you own, that is yours, minus everything you owe. When we take that out, when we take out everything you owe from everything you own, so let's assume you have a house, car, everything, we calculate the value of that, and let's say it's 100,000, and then you owe a bank loan of 50,000, your net worth is 50,000. Okay, so when you make bad money decisions, how you see it is when your net worth decreases. That means it affects the asset side, or sometimes it increases the liability side. Okay, and then relationship strain. They said, what do you call it? Romance without finance is nonsense. Well, this is a popular saying. I didn't say it too. So let's look at some of the common money mistakes we make so that we would advise them. Avoid them. Number one, this is a mistake a lot of people don't know that it's a mistake. A lot of people are sitting on this table. It's a lack of a clear financial plan. People don't have a clear direction of where am I going with my money? What am I doing with my money? You just earn the money, you spend it, you wait for the next paycheck, earn it, spend it, and just a continuous cycle over and over again. Should something happen and that paycheck sees, you are back to square one, as if you had never worked in your life. Without a plan, you cannot be proactive about your money. You are very reactive. And we see this a lot, even when people are investing, because there's a lack of planning, they just come and say, I want to invest. Okay, you want to invest. How do we help you? What are you investing towards? What are your goals? What's the plan? Oh, I just want to invest. If you do things that way, you are probably likely to get bad advice from financial advisors, not because they are bad, but you didn't give them enough information to help you on your financial journey. So how do you recover? With the assistance of a financial professional, put together a financial plan. And it's as simple as sitting down to ask yourself, where am I going in my life? In the short term, in the next 1 year, what do I want to achieve? In the next 2 years, what do I want to, in the next 5 years, in the next 10, 20, as far as you can think. And once you have that picture, then you can, with the assistance of a financial professional, sit down and have in place a financial plan. That means that it will take into consideration budgeting, it will take into consideration saving, it will take into consideration investment. All the pillars that I've spoken about will be taken into consideration here. For example, if you are based on your situation, your parents are growing older, you know that you are the only child, or you are the you know among your siblings, you are the one that is likely to take on more burdens, then something like a life insurance is not something that you have to think twice about. You understand? And this is possible by sitting down, thinking through your life, thinking through your current situation, thinking through your future, and how do you position yourself to win. Two, living above your means, splurging, and especially for young people, sometimes when you go broke, I mean, there's rice at home. So sometimes you don't really see the importance of being prudent financially. But when you begin to, be responsible for yourself, let's say you move away from home, now you have kids, you have all sorts of responsibility. That is when you realize the effect of some of these bad habits. So living above your means basically means that if you earn 1,000, you are spending 1,200. Normally, this is done through maybe taking things on credit, or, oh, I owe you, Charlie, give me some 100 cedis, I'll give it to you next month. It means if your salary is not enough to sustain your lifestyle, it basically means that you are living above your means. And this is often driven by social media. Oh, I said social media, social pressure, lifestyle inflation, poor budgeting. Someone says that Accra, everyone is packaging. So you're also packaging yourself, and your financial situation is not in a good place. How do you recover? Have a budget. Be true to yourself. I earn 1,000. That doesn't mean I'll always earn 1,000. Or I earn 5,000. This is what I can afford. Learn to say no. Learn to control yourself. And learn to save towards delay gratification. Save towards things that you want but can't have now. That is also very, very important. Sorry about that. Okay. Then not having an emergency fund is also a mistake a lot of us make. And we talk a lot about stocks on our page, and we realize that a lot of people get excited about, what's the next thing? How can they make the most returns? Oh, MTN price or GCB, the price went up by 100%. Yay, I'm excited, and they haven't built a solid foundation. Before you invest, ensure that you have an emergency fund. What is an emergency fund? Basically 3 to 6 months of your living expenses that you have set aside for emergencies, because life can be unpredictable. Sometimes illness, sometimes job loss, sometimes family emergencies. You may be called from the village that a blade has cut someone's throat, and you are expected to what? Support. You understand? So life can be unpredictable. So it's important to ensure that you have some liquid cash somewhere that can sort you out. This is very important before you start aggressively investing, because if you invest in long-term investments without having an emergency fund, an emergency may come up, you may want to withdraw, and the timing may be wrong. You can even lose money. You understand? So it's very important that you have an emergency fund. This also prevents you from falling into debt, because if you don't have a buffer, you may have to go and borrow from somebody or sell assets at a loss. This is what I spoke about. Now, this emergency fund, you put in either a high yielding savings account, so you can ask your bank if they have something interesting, or you can also put it in a mutual fund. Some mutual funds give you your money in an hour, or even in less than an hour. Some give you 24 hours, some 48 hours. Just look at the timing and see what works for you, but it should be as liquid as possible. Also, this one we are sitting on, making poor financial decisions due to emotions. This is a thing. Money is very emotional, and a lot of our financial decisions, especially when it comes to investing, is driven by fear and greed. That's why when you hear that, oh, this investment is doing, so well, but you are not part of it, you feel like you're a fool. You haven't taken part of it, so you are driven to take part so that you also benefit. Greed. And then when maybe an investment is losing, as we know, stock prices go down. When the stock price starts going down, you start feeling like, hey, is all my money finished? Is this the end? You understand? And sometimes we are forced to sell. I was even telling a client that during DDP, let's assume people, domestic debt exchange program, sorry for those who don't know what it is, or haircut. Okay, let's assume people invested in the fixed income mutual funds or in bonds for long-term purposes. You understand? And they didn't invest in it for short-term purposes. When all this happened, if you are a long-term investor, you may have the time to wait. Now the market is recovering, and those who took their money took it at a loss. Now the market is recovering. If they had waited, they would have made back some of their money. Well, depending on what they did with their money afterwards, they may have recouped their losses. Okay. So how do you recover from this? Pay attention to emotions like fear and greed when making money decisions. Pause and think. If you are the type that you react, maybe checking your statement, you shouldn't do it too often. I'm not saying don't check your statement, but maybe every week you are checking and reacting and having heart attacks, then you need to stop. Okay. Leaving money on the table. Okay. Some of us are just not taking advantage of opportunities that have been made available. So maybe you work with an employer, or you are going to work with an employer that provides tier 3 provident fund, that provides other benefits here and there, and you are not taking advantage of it. Any benefits that seeks to grow your wealth, that seeks to reduce your expenses, that seeks to add value in whatever way possible, be interested. Find out about it. How do you take advantage of it? That's the benefit of being in that job, especially tier 3 provident fund. I did do a presentation in a school a while back, years ago, and I remember some teachers said they would rather prefer to spend their own money. This is a school that the employer was matching, so maybe if you pay 100, I'll pay 50. They decided that they won't pay the 100, so they are losing out on the 50. Number one, government also says that if you pay the money, you benefit from some tax savings. They also decided that, you know what, I don't want the money, I'll pay the taxes. This is what it means by not taking advantage of some of the opportunities. So recovery, understand your benefit and take advantage of it. Sit with the HR, sit with their accountant, let them explain everything to you. There are some employees in the organization that understand everything and take advantage of everything. Make them your best friend so that you can also do that. Okay. The sixth mistake is not investing long term. Some of us, we at least we have something. We have a savings account, we have some small money market account, but that's where it ends. We don't have any long-term investment. And for some reason, a lot of people, when it comes to investing long-term, ask themselves that, would I be alive then? My husband was just sharing a story of him asking someone about investing for 20 years, and this person is like 20 and is asking, would I be alive then? Just for him to add the 20 to his age and realize, 40 is not too old after all. You understand? So it's very important that while we are looking at our short-term goals, we are also looking at our long-term goals so that we can also benefit from compound interest. As a young person, the blessing you have is time. Seyram will talk more about compound interest. I won't go into that. Lending recklessly to relatives and friends can also get people into trouble. If you are the type that's always guaranteeing loans and the rest, always lend or always guarantee what you can afford to lose. So if it's 5,000 you can afford to lose, always use that. Don't go and give money that you know that if you don't get back, you are in trouble. This also helps avoid certain strains on the relationship or any financial institution. Me, as a matter of principle, I try to, if you ask me for a loan, maybe it's not the best behavior, but if you ask me for a loan, I don't even want to give you a loan. I prefer to give you money and say, if you ask me for 2,000 and I can give you 100 CDs, I'll say, okay, take this 100 CDs dash. I don't want to know that you owe me. That's how I work towards. I manage that, but always determine what you can afford and what you can't afford to lose, and make sure you don't give what you can't afford to lose. Maybe someone has given you money that keep for me, I'm coming. Then you also go and give it as a loan. If you lose it, what are you going to do? I've spoken about impulse buying, keeping up with the Joneses. The pressure is pressurizing, but you need to be disciplined. You need to have your own goals. I think what helps is having your own goals. Sometimes we get drawn to other people's goals and other people's life because we ourselves, we don't know where we are going. But if you are clear on where you are going, even if somebody is doing something and is tempting you, when you go back home, if you put a picture of a Ferrari on your wall, you look at the Ferrari and you say that, yes, this is what I'm working towards. So I'm comfortable with, looking broke now so that I can achieve this particular goal. Very important. Another mistake, taking on more debt than you can afford. The fact that there's something called gearing ratio or debt service ratio. Normally for the banks is 40%. They'll say that they'll give you a loan that the deduction shouldn't be more than 40%, or let's say 50% of your income. The fact that you can afford the 40% or 50% doesn't mean you can take it. You need to ask yourself, if I put this in my budget, would I still be comfortable? If I'm taking this out of my money to pay the bank, would I be comfortable? If your answer is no, then that means that you are taking on more debt that you can afford to take on. Okay, also buying the wrong financial product can also lead you into trouble. Like I said, there are a lot of good financial products out there, but if you don't understand your need and you don't understand the product, there's a tendency to buy the wrong one. For example, a friend told me that she bought feminine insurance. In her mind, when she gets pregnant and she delivers, this insurance will give her some money. It turns out that it was for cervical cancer. So she didn't understand the product. She didn't understand what it does. She didn't understand. She thought it was going to do something else, and then she found out later that she didn't really understand it. Taking advice from the wrong people in this day and age, especially in this day and age of social media, there's a lot of advice, on social media, and I wouldn't say that all of it is wrong, but it's important that we also take advice from people with experience, people in the industry, people who and the Securities and Exchange Commission would even want you to take advice from people they have licensed as financial advisors. So let them be your friends, get to know them. And if you go to any fund management company, they are financial advisors. You can ask them about question. If you don't know something and you just want to confirm with them, you can do that. I remember someone asked me about men's gold when it was the ish, and I did advise them at the time, a husband and wife who were bankers, by the way. Number 12, not saving towards your retirement early because we believe we are young, we will never grow old. Well, how old were you 10 years ago? And how old are you now? How old would you be in the next 10 years? We are all growing, and time, when did we start? 2025, like yesterday, and we are already, tomorrow is September, just like, is tomorrow September? Or Monday is September, just like that. We are getting close to the end of the year. So it's important that you start planning your retirement, even if you are young, because you have the advantage of time. The longer you wait to start, the more effort you would need to put in. I consulted for a man who said he's 50, he wants to save for his retirement some years back. and we did everything and realized that, okay, he'll need to put away 3,000 a month. His salary was 4,000. That's where the conversation ended. So this is just to encourage you. Okay, so Seyram will take it from here.
Okay, thank you very much, Mimi. So I will turn on my camera briefly. All right. So just to, hi everyone. I guess the introductions have been done. I'm not feeling you, sorry. I'm not feeling you guys in the chat. So please, let me, so far, how has the session been? Have we learned anything from what Mimi has presented? Let me know in the chat, please. I want to see responses for at least 5 people. What have you learned so far? What have you learned so far? You've learned a lot. What have you learned? Anybody other than Albert? Albert is obligated to talk because he's brought us here. So anyone else other than Albert? Yes. What have we learned so far? Okay, yes, please. I, for one, have to avoid impulse buying. Okay. What else have we learned? Jairus has responded. What else have we learned? How many people do we have on the call? Yes, we have quite a number of people on the call. So money mistakes can derail your financial health. That is true. Don't loan money you cannot afford to lose. That is very, very important. Okay. Yes. Don't loan money. It's never too early to start saving for retirement. Exactly. We always say that you have to save from your very first paycheck. You have to start investing towards your retirement. I have to start saving and setting goals early. Thank you. It means you guys are paying attention. Thank you all for responding. Mimi, can we go to the next slide, please? Or better still, if I can be given us. Okay, great. Can we still see the screen?
Yes, please, we can.
Okay, great. Someone says, I've learned a lot about the need for emergency funds before going all out on investing. Yes, okay, great. Thank you so much. So one of the tools, Mimi has spoken a lot. So just to delve into, what we can do, the actions that we need to take. And one of the things, it may sound like a cliche, everybody's talking about budgeting, but budgeting is is an essential tool, right, in trying to grow wealth. There are others who don't agree, but personally for me, budgeting has significantly helped me. Mimi cited an example of mentioned about not spending more than spending within your means. So if you earn 1,000 cedis, we find that some people end up spending, 1,200. And we all live, just say Accra stay by plan. You don't know, you just don't know how, but you realize that you end up spending more than you actually make. And one of the reasons why we do that is because we do not budget. So essentially, budgeting just helps you know where your money is going. It is a plan. It tells you where your money is going. And it is very, very important because it is only when you budget that you are able to have control over your money. Is there anyone here who budgets? Is there anyone here who budgets? Let me see in the chat. What tools do you use to budget? Sorry, I like very engaging, sessions, right? I know it's a master class, but I want it to be very engaging. Do you budget? You use Excel, great. What else? Who else budgets? Okay, Ali, that's good. How do you budget? Yes, Albert says. So one of the mistakes that we do when it comes to budget, and I find that I use Bookem. Exactly, old-fashioned budget. There are so many tools. The most important thing is that you are actually doing it and you are planning before you spend. So as I said, it's budgeting is really just highlighting you have this money and this is how you expect or this is how you plan to spend it. Okay. And one of the mistakes that we find that lots of people do is that they end up budgeting after they have spent. and not before. And so it's very important that you don't end up, because look, when you have already spent the money, then it's pointless. You realize then that you've probably overspent, or you are in debt, or you didn't spend it on things that you valued, or things that you actually wanted to do. So it is important that we budget before we spend. So every money that comes to you, just make sure that you have a plan for it before you spend. And there are different types of budgeting methods. Some people have listed it. Some people have said they use Excel, some use pen and paper, some use Samsung notes. Really, whichever works for you. But let me just talk about three how to budget. Right, there are a number of ways that you can budget, and personal finance really is personal. So whichever works for you, you do it. So generally, right, if for those who don't know how to budget, there's a general one that you can, that's a 50-30-20 rule. And where we say that at least, so you divide whatever money you make, right? Divide it into three. 50% of that money is going towards your needs. Your needs here are food, rent, the things that you need that you cannot live without. Okay, clothing. I mean, not the extra wig or the extra pair of jeans, no, but like clothing. So these are the things that you need. Like your life is dependent, or your income stream is dependent on things that you need. That 50% of the money goes towards that. And then 30% of the money goes towards things that you can actually do without. So your wants, you want to go to the movies, you want to go to a restaurant, you want to Netflix and chill, because Netflix and chill is not a need, right? So 30% goes to that. But more importantly, 20% of whatever income that you make should go towards a financial plan. Okay. It should go towards a financial goal. And it's always, I think Mimi mentioned it, it's always important that you work towards something. You don't just invest, or you don't just save for investing or saving sake. You do that towards a goal. So at the minimum, 20% of everything that you get. So that's a rule of thumb. So even if you can't do the 50-30, or you don't want to do the 50-30, however you want to do it, all we are saying that at least 20% of whatever money you earn should go towards your investments, should go towards your savings, or it's at the minimum 20%. And it's very, very essential. And so budgeting really helps us to avoid lifestyle inflation. So for me, because I earn income on a monthly basis, I budget on a monthly basis, right? So I budget before my salary, because I know what my salary is. And so I budget for the month. Okay. And I budget everything. I use I don't use a 50-30-20. In fact, let me say I combine the 50-30-20 with the zero-based budgeting. Zero-based budgeting simply is that you are going to detail out every single item till zero. Okay, so if you earn 1,000 cedis, you're going to assign a job or a task to every one cedi of it till zero. So the income minus the expenses will now equal to zero. So let's say you earn 1,000, so you are saying that rent 100 cedis, utility 20 cedis, school fees 500 cedis. You are going to itemize everything till you get to zero. Okay, so that also is an option, depending again. However, the most important thing is that you are doing it and you review it. Don't budget and let it just be there are some people who budget just for the face of it. I don't know whether just to make them feel good. They budget and it is not realistic. You are budgeting because investment friends says you should budget, and so you just want to budget for you to feel good about it. No, don't do. Make sure that you revisit the budget. If it is not realistic, make it realistic and adjust it as your lifestyle changes. Make sure that the budget actually reflects the lifestyle. And so another thing too that we do with I think I've talked about going back to visit the budget, right? And when it comes to budgeting, so another thing that I want to highlight is that always make room for to pay, always make room for Anijie, okay, so that at least a little, spoil yourself, have fun money also in your budget. Budget for it so that it's not always just bills. It doesn't feel like you are just paying bills. It doesn't feel like it's become so restrictive. You can't even chill small. It's important that you include Anijie Sika, at least a portion of it also into your budget, because guess what? You are paying yourself first by investing, right? Or by putting money towards your financial goals. You're already paying yourself. So it's important to do these things. And if you are the type that doesn't have regular income, so let's say you are a consultant, or you are self-employed, right? And so your income is, what you can do is to have an average, right? Of maybe use your lowest income, right, for the month, and use that as a basis for your budget, okay, so that you can live on that. And also, again, on the budget, and someone will say, I'm an entrepreneur. And so what I find is that most people mix up their personal finances to their business finance. So please, if you are a business owner, put yourself on a budget and pay and spend within that budget. So if your business can afford to pay you 500 cedis, 500 cedis is what you have. Okay, so at the end of the month, you need to spend within that 500 cedis. Please, are we learning something? Are we learning anything?
Yes, we are learning
Okay, great.
so much.
Please just drop it in the chat. I mean, I like to see things in the chat so I know I'm not alone. Okay, Mimi, next slide, please. Okay, so once I've talked about the fact that 20% of your income, right, at least, again, emphasis on at least, because look, 20% of your income should go towards your savings. So, but if you are currently, maybe you are not married, you don't have children, you are not taking care of anybody, it is just you and feeding yourself. If you are even lucky, you are probably still living under your parents' roof and all those things. Please, if you are that person, as we have said, you have a lot of time on your hand. If you are that person, then you should be doing more than the 20%. So that's why I keep stressing on the at least 20% should go towards your financial goals. So if you are not paying school fees, you are not like, you can afford to do it, please increase that 20% so that in the future, when the bills start coming, you have a lot more flexibility because you started working towards your goals at an early stage. So we are now going to focus on that 20%, what we mean by the 20%. So we are saying that 20% should go towards your financial goals. So it could include your investment, your savings. And when we talk about investment is really anything that is going to bring you income. So it could be stocks, it could be starting a business, it could be buying a treasury bill, it could be anything that is going to bring you an income. It could be buying a property. Yes, anything that is going to bring you an income is investment. And we find that, maybe next stage, is it possible to make me so that I share my screen rather? So flow.
If you also share your full screen, you can see the chats. So if you are comfortable with that.
This host isn't allowing.
Please let me ask Albert
Sure.
to do that for you.
Thank you. Please confirm if you can see my screen.
Yes, I can see it.
Okay, great. This is Yep. Okay. Thank you. Great. Okay. Yes. So I was talking about investment. Let me go. Okay, yes. So one of the things we've noticed is that people usually confuse investment with savings, right? People are saving and think that they are investing. So let's now break it. So savings is putting money aside for the short term. Whereas when it comes to investment, you are looking at putting money aside for the long term. And savings usually, as we've indicated here, short-term goals. What are some examples of short-term goals that you can think about? Please drop it in the chat. Some examples of short-term goals that you can think about. You think that your savings can be used for. Please drop it in the chat. Vacation, okay, depends on when you are going on the vacation. My vacation, for instance, is a long-term goal. Buying a car, okay. So any goal that you are looking to do within the short term, less than 1 year, becomes your a short-term goal, right? So you use your savings to meet that, your emergency fund. All those things are short-term goals. And then investments are the ones that you are using to meet your longer-term goals, right? So what are some examples of longer-term goals? Please drop it in the chat. Longer-term goals, please drop it in the chat. Retirement can be a longer-term goal. Um, um, University, college tuition for the mothers here can be on a long-term goal. Your masters can be a long-term goal. Even your trips can be long-term goals. So anything that is beyond 1 year, right, we would call it a marriage. Yes, Albert, marriage is starting a scalable business. Albert says marriage is a long-term goal, right? And so those are the things you use. So that's really is the difference. You don't save to grow wealth. You don't save, you don't keep money in your savings account for something that you want to achieve in 5 years. It doesn't add up. It doesn't make sense. It's just a waste. You are literally leaving money on the table by doing that. Savings offers also little protection against inflation. When we talk about inflation, we are talking about, do we all agree that what 100 cedis could buy a year ago, in fact, the beginning of the year, right? And what it can buy today has changed. Do we agree to that? That if 100 cedis, in fact, 100 cedis could buy, how many tins of milk could, ideal milk could 100 cedis buy last year, compared to how many tins of milk that same 100 cedis can buy this year, right? You realize that it can now buy fewer tins of milk than it could have bought last year. That really is inflation. Savings doesn't protect you from any form of inflation, or it protects you, like, just offers little, because you don't make any interest, or you hardly make any significant interest on savings. In Ghana, most savings accounts give you an average of 5% per annum. And even with that, even if you factor in the charges that are on the savings account, EMFA, right? So it gives you little protection against inflation, whereas investment actually offers you higher protection, because most investments come with returns, right? And so because there are returns attributed to the investment, if the returns are higher than inflation, or even close to inflation, it helps to protect your money. So that if you had invested 100 cedis maybe last year, maybe today, instead of buying just 5 tins of milk, because of the interest that has accrued on it, you can possibly buy 7 or 8 tins of milk, compared to what you would have done if the money was just sitting down. And then we are talking about returns. Savings gives you low returns, investment gives you high returns. Risk. When it comes to savings, it's quite low risk. I wouldn't say zero risk, low risk, because even there were some financial institutions that lost their licensing, and all those things can come with risk, right? But investment comes with medium to high risk. There are some investments that come to relatively low risk, but if you want to invest, then you have to be willing, you have to understand that you are going to be taking risk. And then when it comes to liquidity just talks about how quickly it takes for you to get your money back, right? If you want your money right now, if you put your money in something and you want your money back right now, can you easily get it? That is liquidity. When it comes to savings, we all know now you have your ATM card. You can, even because of the interoperability, you can withdraw from your savings account quickly, or send money to your savings account quickly. Like, you can easily have access to the cash. But then when it comes to investment, depending on the type of investment, it may take a while before you can have access to the cash, before you, if for instance or you say that you don't want to do treasury, you don't want to do stocks, all you want to do is land, right? You go and buy land, or you go and build a house, or let me just use land. All your investments is in fixed assets, it's in land, and you want to sell today. Right now you need cash. It may be difficult. It may not be as liquid. You may end up, if you want the cash immediately, you may end up having to sell it even at a discount or lower than the value of it. So it's important for us to know this. And then the type of products that usually we can use to save are like your savings accounts, like your bank accounts. And then when it comes to investment, we are looking at real estate, we are looking at treasury bills, we are looking at bonds, equities, mutual fund, even cryptocurrencies for those who are quite adventurous. Okay, so we talked about the importance, and Mimi touched on the importance of starting early. So let's run through these two scenarios. Let's talk about Angela. Angela is somebody who started, in fact, both Angela and Gilbert started work. They got a job at 25 years, and they all planned that when they are 60, they will drop it and say that they are going to retire. But guess what? And they all agreed that they needed to start investing towards their retirement, right? But Angela started investing immediately from her first salary. As Mimi said, from her first salary, she started working towards her retirement. And so she was doing 100%, 100 cedis every month into her retirement plan, which was doing about 15% per annum. Gilbert decided to wait 5 years later because, YOLO, you only live once, etc., right? And so, and their salary was not enough, and then all that. But they were all earning the very same salary. And Gilbert decides that I'm going to wait. And when Gilbert finally hit 30 years, he was like, now I can start, and I'm going to double the amount. By the age of 60, this is what they would have. These are the results, as you can see. Angela would have saved or invested only 42,000, and her amount that she would have at the age of 60 would be 1,057,000 Ghana cedis. Gilbert, who would be, even though he doubled up, or if you can see, he doubled up to 200 every month to try and catch up. But guess what? The total amount that Gilbert ended up investing was 72,000, meaning that he even invested 30,000 more than Angela. But yet still, he got what? 1,043,000. What does this tell you? Please let me see it in the chat. What lessons does this tell you? What does this tell you about? What does this tell you so far with all the things that you have heard? What does the story of Gilbert and Angela tell us? What does the story of Gilbert and Angela tell us? Start as early as possible. Thank you, Albert. Albert, yes. Compound interest, great. Time, place, exactly. In fact, you guys are already doing the master class with me. Like you, yeah, time, place. So key learnings, time, someone has already said it, time value of money, right? Time value of money, it cannot be underestimated. Compound interest, as someone has said, is a game changer, and so we need to leverage it. And so the best time for us to start, if you haven't yet started, in fact, the best time was yesterday, but the next best time for us to start investing is now. Okay, so when we talk about compound interest, there are two principles that we are looking at: time and consistency. If you want to unlock or take advantage of compound interest, you need these two things: time and consistency. Okay, so let's look at how it actually works. This is just an example. So leveraging on what we did with the Albert scenario, right? So if you invested like 100 cedis, okay, we are looking at the time and consistency, right? If you invested 100 cedis in a mutual fund that does say 15% per annum, okay, averagely, 100 cedis, 5 years, you have about 8,857 cedis, right? But in 30 years, you have about 692,000. If you were doing it 300 cedis in 20 years, so it just shows like so if right now, as I said, if right now you don't have major responsibilities and all those things, you don't need a lot of money. Don't wait till the example Mimi said, you have 10 years or 5 years to retirement, and now you need to put aside 3,000 cedis out of your 4,000 cedis salary to be able to meet your goal. So if your retirement goal is 1 million, let's say by 60, the age of 60, you want to have one, or you want to have 1 million cedis. Right now, you can do that averagely. This is like a very conservative estimation, right? If you were willing to just put aside 200 cedis every month into a mutual fund for the next 30 years, you will easily have 1.3 million. You will easily become a millionaire. So it's important that we take advantage of time and consistency. This is also, again, just on the dollar side, right? This is assuming for those who invest in the US stock market, right? Assuming that you invest in a fund that does about 8%, like if you can afford to do it, this is how it's going to look like. Okay. So how do we make how to make informed investment decisions? The first thing that we need to understand, right? The first thing that we need to do is to clarify our goals. You need to know why you are investing or saving for. As Mimi said, don't just say, I want to invest. You want to invest, and so what? What do you want to invest in? Why do you want to invest? Okay. When do you need the money? How much do you need? Okay. Why is this goal important to you? It's important to ask yourself these things, because when you become like, when you are least motivated, right? Or when you are not uh, you get the money and you're about to blow it, your why will remind you that like this is why, like this thing is more important. So let me defer gratification. Let me put the money here because of this particular issue. Okay. If you don't have a why, you will just do anything. You are saying that you want to you want to get married. You want to get married in 6 months. Okay. Your goal for invest, you want to get married in 6 months. Yet you've heard that cryptocurrency, you and you started putting money together. You have like your 50,000. You are getting married in 6 months. You say, okay, someone comes to tell you about cryptocurrency. Then you've gone to put your money, that 50,000 in cryptocurrency, and then you lose the money, and then you are crying. Or you go and put it in the stock market. And in 6 months, when you want the value of the money has gone down, right? This was because you didn't understand, you didn't have a goal. Because when you have a goal, the goal will help you now develop a strategy, because not every investment is for every goal. If you are looking for steady cash flow, you don't go and buy certain types of investments. Okay. And if you are looking for to grow wealth, then there are different strategies that you use. So it's important that you have a goal, and the goals have to be specific. I know you've all heard this before. It has to be smart. It has to be specific. Don't just sit down and say, I want to be rich. What does I want to be rich mean? Somebody's I want to be rich is $200,000. You need to quantify it. Okay. So one of my goals is that I want to give my kids, when they are 25 years old, I want to give them $200,000 each. I have clarity, it's specific, right? So that is what I'm investing for. I'm investing for 250,000. Is it specific? Yes. Is it measurable? If I can hit it, if right now I'm at $50,000, I know like I can measure it, right? Is it realistic? Depending on my circumstance, does it look like something realistic for me? Yes, to me it is realistic, right? Sorry, is it attainable? Yes, it is attainable to me. Is it realistic? Yes, it's realistic, right? Is it time bound? Is it time bound? I said by the time they are 25 years. So how old are they today? I know how many years I have more for them to be able to achieve that goal. So it's important for us to clarify the goals. Then number two, you need to understand your risk tolerance. it's very, very important. And I think that sometimes we skip this, and we investment advisors, we don't talk about this a lot. When we talk about risk, there are two main types of risk. There's the systemic risk. Look, COVID happened, right? Things shut down, companies shut down. It's what we couldn't do anything about it. It was systemic risk. Government of Ghana 2 years ago said that, hey, the loans that we have taken from you people as bonds and all those things through your mutual funds, we can't pay right now. So we are going to cut them down. Like if you gave us 100,000 for 2 years, now we are going to say that 100,000, instead of the 2 years, we are going to spread it for 8 more years or 12 years. And then if we promise you 10%, now we are going to give you 2%. Or so you see, government of Ghana did, it was a systemic risk. Nobody predicted it, right? Nobody had control over it. Inflation went, the cedi depreciated significantly last year, 2 years ago. This year, it appreciated significantly, right? And now it is going back. Those are all systemic risks. So, and then we also have unsystematic risks. So the unsystematic risks, they affect a specific sector or a specific institution. So it's not widespread. And so to prevent the unsystematic risks, those ones you can use strategies to help you minimize those risks. But systemic risks, you can't do anything about it. So you, based on that, you need to understand yourself. How comfortable are you with risk? Sometimes you think you know how to take risk until the risk happens to you. Then you realize that no, I don't know how to take risk, right? If you gave me your money or you put your money here, 1,000 cedis, and tomorrow we tell you that 1,000 cedis is no longer 1,000 cedis, it's currently around 800 cedis, what would you do? What would be your reaction? Would you immediately say, give me my money, give me my money, give me? When the haircut was happening, people went to withdraw. Meanwhile, we told you that, look, don't, if you withdraw is when you actually get the loss, you get the haircut. But people were withdrawing, be like, give me my money, give me my money. But if you are the type to that said, oh, okay, even though it's 800 cedis, it's dropped from the 1,000 to 800 cedis now, I know that, oh, in the near future it's going to go up. I'm not too worried because I'm investing for the long term. That's also different. You need to understand yourself. And so, do you prefer security, or you want, like, you are willing to take risk? And we say high risk, the higher the risk, the higher the expected return. And again, risk is the fact that you may lose the money, you may lose part of the money, or you may even get more than what you had expected. So it's important to understand these things before you do any type of investment. And like, when you get to a certain age, I know most of us here are young, but like, I don't expect my 60-year-old dad to now go and be investing in aggressive stocks. No, right? Because the stock market, for instance, is quite risky. Okay, so you need, like, you need to understand yourself, and then that will also help you to pick an investment strategy. Then, how long, define your time horizon. I think we've talked about it, if it's short term or long term. And then the other considerations, your age, where you are in life, your family situation. If a lot of people are dependent on you, are the sole breadwinner in your family, please, there are some risks that you don't take. Okay. And then also, before you invest, the how to make it, again, define your time horizon, right? And then look at your age and all those things. And then before you part away with money, understand it. Know what, don't invest in things you don't understand. Research the product, find out to see if the financial institution, wherever you are giving the money, it is legit, it is licensed, it is regulated, okay? And seek expert advice if you have to. So there are so many ways to grow your money, and so we'll just briefly go through these ones, like on a higher level. First type of investment options are the money market securities. These are any type of investments that are less than 1 year. Okay, so you have fixed deposits. Treasury. I know everybody here knows Treasury bill. Treasury bill is that you are lending your money to government, and then so it's just like giving a loan to government, then government will pay you back. In Ghana, Government borrows money from people for 3 months, that's the 91 days. For 6 months, that's the 182 day. And then for 1 year, that's the 364 days. So government will come and borrow money, like you can lend your money to government, and at the end of the period, they pay you back. When you hear that Treasury bill rate, right now, 91-day Treasury bill rate is 10%. But when you hear 10%, don't think that you get the full 10% in 3 months. So no, that 10% that they have mentioned is for 1 year. Anytime somebody mentions interest rates, especially on financial, assume that it is 1 year. So if you are only giving them the money for 3 months, that's what, a quarter, 91, a quarter. So you are going to be getting 2.5%, right? That's a quarter of the 10%. I hope that makes sense. If you are giving the money to them for 6 months, you are going to get half. That's 5%. So it's important that we understand this. So fixed deposit is that you are giving the money, you are not giving it to a government, or you are giving it to a financial institution, but same principle. But in this case, the risk is to the financial institution. So banks, savings and loans, microfinance, they are the only ones that can do fixed deposits. Okay. Then we also have commercial papers. It's not very popular on our market, but quite recently, we had our very first commercial paper issuance. I think it was in April. It just matured recently. It was done. So that is a company that is not a financial institution can come and raise money can come and borrow money on the short term, for the short term, anytime less than 1 year. We call that a commercial paper. So MTN can come and take money that I'll take your money at 20% for 6 months. Can do that. So that's what we call a commercial paper. Then we also have money market mutual funds. Mutual funds are just really like, they take everybody's money, right? They take my 50 cedis, Mimi's 100 cedis, Albert's 200 cedis, Ruhaya's 1,000 cedis, put it all together and then invest it on our behalf. So they use it to buy different assets. So because I've said money market is for short term, this particular fund, when they take all the money, they will use it to buy treasury bills, fixed deposits, repos, anything that has less than 1 year to mature. So that is the fund. So if with your 50 cedis, instead of, if you only have 50 cedis and you cannot buy fixed deposit for that 50 cedis, you can buy a mutual fund, because that mutual fund already invests in all the things, the fixed deposit, commercial paper. So it gives you opportunity to own. So once you're a member of that mutual fund, you own fixed deposits, you own commercial paper, you own treasury. It means that your money has been spread. It also is good for we call it diversification, because if one instrument is not doing well, another one will do well to cover it up or reduce the loss for you. So that's any money, there are a number of them. Where Fidelity has a Fidelity Securities, has a money market, FMMT, Fidelity Money Market Trust. There are a number of them around, right? Then we have fixed income securities. Fixed income securities are usually for medium to long term, anything above 1 year. And usually they give you, like, if they tell you they are going to give you 20%, it's 20% you are going to be getting on the every year, right? It's 20% you are going to be getting. So there are different types of fixed income assets. We have corporate bonds. Corporate bonds are, if a company like MTN or Casapreco, let me use Casapreco. Casapreco comes to borrow money for more than 1 year, okay, from the public, we call that a corporate bond. It means that you are giving a loan to Casapreco, okay, so for more than 1 year. And then government bonds, the same way, you are giving a loan to government for more than 1 year. And in the same way that we have money market mutual funds, we also have fixed income mutual funds. Okay, so these are funds, like mutual fund, that they invest in corporate bonds, government of Ghana bonds, and all the other long-term bonds. So bonds can go as high as 30 years, 20 years, and so those are, and they can be medium risk, like medium risk and medium liquidity. Okay, then this has also become a lot of people's favorite these days, equity stocks. Stocks, meaning if you invest in stocks, it just means that you are investing in a business. Okay, so in this case, somebody sets up a business. The person now says, I'll be practical as possible. So I'll use MTN. In 2018, MTN, who should I use MTN or no? Okay, let me use MTN. MTN is very popular. In 2018, MTN had to come and raise money from the public. But usually when somebody wants to issue shares, it means that they are coming to raise money from the public before maybe they want to expand or for different things. Right? MTN's reason for coming to the public in 2018 was because they had now become 4G. They've gotten a 4G license. And when they got a 4G license, the government or the law says that when you get that 4G license, you have to let Ghanaians also become owners of the company so that when you make profit, the locals, the nationals can also benefit from the person. It's not going to only the foreign owners of the company. So in 2018, MTN was forced to come and give some of its shares, like the ownership of the companies, to locals, to Ghanaians. So MTN did what we call an IPO, an initial public offering. Initial means that was the first time they were welcoming Ghanaians to come and invest in MTN. So when at that time MTN came to we say MTN came to raise money. We gave them money, and then in exchange of the money, they gave us shares. So at that time, the MTN share was 75 pesos per share. So if you gave them 100 cedis, right, you would have gotten 100 cedis divided by 75 pesos. You'd have been able to buy about 133 shares. So you will no longer have the 100 cedis. You now have what 133 shares of MTN. Okay. And so how then do you make money from MTN? Or money from stocks, two ways. The first one is that when MTN makes profit, okay, when MTN makes profit, it pays a part. It can decide. It's not compulsory. Okay, they can decide that they will pay a part of the profits to shareholders. MTN as their own policy, dividend, we call, and that type of profits, and we call it dividend. MTN as part of their own dividend policy, they pay 80%. So whatever profit they make, they pay 80% out to shareholders. Okay. And so that is one way of making profits. And again, as I said, it's not compulsory. If the company thinks that it needs to expand, like if you take a company like even when last 2 years, for the past 2 years, the banking stocks in Ghana, right? Like Cow Bank, they haven't been doing too well. They needed to like reinvest like they needed more money. So instead of paying dividend, they didn't pay dividend. So they had decided to reinvest, like it's like putting the money, plowing the money back into the business. So dividend is not by force, but there are some companies that have consistently paid dividends. If you take a stock like Coca-Cola, for the past 100 years, every year Coca-Cola pays dividend. Okay, so there are some companies that are known as dividend paying companies. So that's one way you make money. The second way that you make money from the stock market is capital gain. Remember, I use MTN as an example. MTN in 2018 we all bought the shares for 75 pesos. Okay. Today, if you want to sell MTN shares, let me see the price as at Friday. Let me see MTN. Apologies. Let me just trying to check there so that I don't give you wrong filler. Yes. As a Friday, if you wanted to sell MTN shares, you'll be selling it at 3 cedis, 87 pesos. So remember that we said our initial 100 cedis that we invested in MTN, we were able to get 133 shares. So if today we are selling that 133 shares, we will be getting about 514 cedis. Remember, we invested 100 cedis in 2018, and we haven't even added the dividends that we have gotten. So just on that, you would have made a capital gain of 414 cedis. Okay. 404, that's what we call your capital gain. So capital gain is the difference between how much you bought the shares and how much you are selling it at. And it can also be capital loss, because even if you had bought, maybe 2018 was far, you decided to join the MTN wagon this year, okay, in January, you would have bought it around 1 cedis 90 pesos. Still, if you are selling it, you still make a profit because you are selling it at 3 cedis 87 pesos. If you had bought it in April, was it April or May? It was around 3 cedis 55 pesos per share. Again, if you had bought it at April, yes, it was 3 cedis 55. If you are selling it today, you realize that the capital gain that you'd have made is quite small. You'll be selling it as you'll be getting only about 32 pesos per share, but it's still a gain. Okay, if you had bought Cow Bank around when I sold it, around April or so, was it April or May? If you had bought Cow Bank around May, you'd have bought it at 80 pesos. Today, if you are selling it, you'd be selling it at 50 pesos. You would have made a loss. But if you had bought it at the beginning of the year, like Seyram did, and I bought it at 41 pesos per share at around 14 February, that was my Valentine's Day gift to myself. I bought it at 41 pesos per share, and I sold it around 80 in around, yes, April or May, which then it was around 80 pesos per share, 88 pesos per share or so. I made money, right? So the stock market is very can be volatile, but you don't, there are also ways that you can strategize so that if you don't know whether it's MTN you want to buy, is Apple you want to buy, is Amazon you want to buy, you can actually buy a mutual fund that invests in all of these companies so that you like all of like you diversify so that even if Apple is down or Tesla is down, Coca-Cola is giving you money. Okay, so those are all options available on the stock market. If you want better detail into the stock market, we will be having an upcoming stock class in ending of September or October. But if you want to watch it now, you can also just go to our DM our Instagram and you have a recording of our previous stock classes. So where we delve deeper into just investing in the stock market. Just because in the interest of time, we cannot cover all that here. Then we also have commodities. People look, there also an investment option like gold, right? Gold has been doing amazing this year. And so in Ghana, if you want to buy gold, you can't go and do galamsey to buy a physical gold. But it's important that gold is seen as a haven, right? A risk haven. So when everybody is panicking, gold prices tend to go up because people then go and buy gold because it's seen as a risk haven. Is there a risk haven? Like yes, it's less. It's if in the long term it always appreciates. So it's gold is a good commodity to have, and so you may not be able to go and buy the physical gold, but you can buy gold products. So Ghana recently has a gold coin or the new gold ETF. The new gold ETF is on the Ghana Stock Exchange. You can buy it, or you can buy any gold ETF. It's just a fund that tracks gold. Okay, the underline is gold. Then you can also invest in your business, invest in land. People do land banking a lot. I was having a discussion with a friend last week. He says that now the land is going somewhere 60,000. He bought a land be at, is it personally I bought land my land at Oyibi. We got it around 12,000 cedis some years ago. Today that land is worth over 200,000 cedis. Okay, so land banking is also if you can, but just that with those ones you need a lot of capital. It can be capital intensive, and also you need to look in the long term, right? And then also there are the private alternative investments. I mean, these are quite high level, or quite, yes, but these are also, you can just speak to any fund manager. These are also investments that are available. Okay. Sorry, I haven't been checking the chats lately, so I haven't seen if there's any question or any. Yes, there hasn't been any question here. Okay, good. So now let's talk about mistakes. I mean, Mimi talked about some of the mistakes already. I hope I don't even end up going to repeat a lot of the mistakes, but if these are mistakes that we should try and not fall to. Okay. These are the mistakes that we need to avoid so that we make wise investment decisions. Number one, jumping on the bandwagon. Like right now, even stocks, the stock market, everybody, hey, MTN is going up. Hey, my phone. Sorry. Forgive my dramatic self. I just realized I don't have my camera. Forgive me. Oh Lord, me and my camera. Everybody, oh sorry, I've been all dramatic all along. Sorry. Everybody is jumping on the bandwagon. and our MTN shares, and our what Apple stocks and US stock markets. And we have been preaching it, but don't go and invest because everybody is investing. As we've said, you need to understand what you're doing. I remember like crypto, everybody was doing crypto, or everybody is selling their shares. So you are also FOMO. Don't allow FOMO to get to you. You need to understand it, and like what's it called? Men's good. People were doing men's good. It's like those early bird syndrome things. Like there is just is the early bird catches the worm, right? People didn't understand. They took their life savings and went to put it in. My mother was smart. She went to put it in men's good because everybody was buying men's good. So please, we shouldn't just even when it comes to legitimate investments like investing in the stock market and all those things, we need to understand it. Okay. Then number two, chasing high interest rates. We've said it that the higher the risk, the higher the expected return. Expected because the return is not guaranteed. And one of the questions I don't like, people meet you, hey, Seyram, I want to invest. How much will I get? How much will you get? Sissy? You need to understand what you are looking for. Like, why are you investing in the first place, right? Why are you, and then are you willing to take the risk? Because I've realized a lot of people want the high returns, but they are not willing to take the risk. And then emotional investing, panic, like I've already mentioned the panic selling, like Mimi recently shared on a different platform that she just panicked and went to sell, like the stock market was going that she just went to sell some of her stocks. And I just opened my mouth like this. So we see we are all still figuring it out. Okay. So don't be too emotional. As Mimi said, money is an emotional issue. But when you need to use your brains other than like your head, I mean, other than your heart, when it comes to making money decisions and then investing in things you do not understand, please, that is a crime. Make sure you understand it. Make sure you ask questions. Make sure that you want like you receive the answers. Like when you go to even a bank, and this one I will say it, like when you go to a bank and they are telling you to do a fixed deposit with them, ask questions. How much is Treasury bill? I don't understand. Like in Ghana, the banks in Ghana position themselves like they are technically that they are safer than government of Ghana. So fixed deposits, a bank, even if Treasury bill is doing like right now, when Treasury bill was doing around 20%, a bank fixed deposits was doing around 5% or 10%. It's nonsense. Forgive my friend. It doesn't. So because you need to understand the business model, right? So just ask questions, okay? And then no goals or misaligned goals. Don't just invest because hey, we are saying invest. Tie your investments to goal. So all what Mimi and I preach is goal-based approach to investing. Okay. Then also putting all your eggs in one basket. It's like what happens when the basket falls? All the eggs will break. So that is why it's important that you diversify. And one of the cleanest ways or the easiest ways to diversify is to invest in a mutual fund or an exchange traded fund for if you are looking at the stock market or a mutual fund, because as I said, it pulls different investments together. Depending on if it is a stock fund, it can be different uh, sectors of the economy, right? So remember when COVID happened, please, I want to know if you are still with me. Which sectors were down? Okay, I've seen the question. I'll come back and answer questions later, Mami. But which sectors were down when COVID hit globally? Which sectors were down when COVID hit? Please, I want to see it in there. Hi. Please, can you hear me? Which sectors were down, were hit? Education, okay. How was education? Okay, somebody says education. Which sectors were down? Like which industries? Tourism, transportation, exactly. So hospitality, aviation, yes, great. So imagine if you had stocks only in these sectors. Okay, so which sectors also went up? Which sectors were thriving during COVID? Which sectors were thriving during COVID? Now that we've answered the sectors that were hit, which sectors were thriving during COVID? Health thriving? Yes, health was thriving during COVID. Yes. health, and online shopping. Yes, telecommunication. Exactly. So you see, imagine tech. Exactly. So if you had only your stocks, if you were only holding stocks of aviation companies or tourism companies and COVID happened, guess what? Your stocks will be, the value of your stocks will be down, right? But if you had a pool or a basket that had all of these stocks in there, even if aviation was down, healthcare would have reduced, was going up. Tech stocks were going up. You are talking about online shopping, all those, they were going up. Food, people were still eating. So the likes of, I mean, especially in the US market, the likes of Walmart, Costco, their stocks were, because people were still eating, right? So those ones were still going up. So you realize that even if the whole thing was supposed, the aviation stocks were down, you realize that the gains from the other side will reduce the losses. Okay, it would reduce. So it's important that you always diversify. You don't put all your eggs in one basket. Okay, so and when we say diversify not only in Ghana. If you look at the DDP, the reason why we had the haircut seriously was because a lot of the mutual funds that were supposed to have been diversified were all tied back to government, because we were buying treasury bills, we were buying government of Ghana bonds, and all of these things were all government. Okay, so it was still not diversified. So we need to diversify, not even only just in asset classes, but also, I always say that you also need to diversify in currency. So yes, you have so I'm not the school of thought that take all your money and go and put it in dollar. Look at what happened a few months ago when the dollar, the cedi started appreciating against the dollar, right? So you need to have a bit of it in your cedi, have a bit of it in the US market or in the pound, like diversify also across currency, or buy a mutual fund that is well diversified. Okay, there's a fund on the US stock market. We call it an exchange traded fund. It's just a basket, like a hamper of different stocks. One of the popular one is the S&P 500. If you say S&P 500 is a list of 500 of the largest companies in the world, so talk about Amazon, Apple, Netflix, Tesla, Nvidia, all of Microsoft, Google, Meta, all of them are in this S&P 500. So if you don't know whether it is Apple to buy or it is Amazon to buy, once you buy this is not investment advice, but once you buy an S&P 500 ETF, you are automatically exposed to 500 of the largest companies in the world. And historically, it has done averagely about 8% on the dollar per annum. So then it gives you a good diversification. Okay. Then, so if talk about thinking some investments are risk-free. Government of Ghana has taught us, no, not, it has because it's always been there. It's re-emphasized the fact that there's nothing like risk-free. Any investment can go bad. So just make sure that you understand this, and then you put in strategies to reduce the risk. There is no risk free. And then timing the market. As this especially is when it comes to the stock market. People are saying, oh, I'll wait when MTN falls to this. Do you know when it will fall? You don't know. You were even like that. I'm sure almost all of you have heard about Warren Buffett. If you have not heard about Warren Buffett, please, he's the wealthiest investor. Like, I mean, if you don't know Warren Buffett, please Google him. He says that even the learned fund managers and all those things have not been able to get it right. Nobody can time the markets. Like, just invest. And what I say is that invest anytime you have money. Don't say that I'm waiting for it to drop. What if it doesn't drop? So you use a strategy. You can use a strategy called the cost averaging strategy, or it can be dollar cost averaging or cedi cost averaging, depending on which part of the world you are, right? And so what it is that every month you buy, or every time you have money you buy. So today you may buy MTN. Like, I bought MTN when they did IPO at 0.5 pesos, 75 pesos per share in 2018. Immediately MTN listed, they dropped to 50 pesos. I bought. So guess what? That time I got more shares. MTN came to do localization, and it was one cedi. Mimi, how much did you? I think one cedi 30 pesos. I still bought. Quite recently, I bought MTN at 3 cedis 55 pesos. So you realize that because the prices keep going up, it averages it out. So you end up your average cost of purchase, right, is lower, is low. So don't try and time the market. And then investment PTS, this is very important. We know that especially for those in the last 2-3 years, especially in the Ghanaian context, where we had a lot of mutual funds, like people experiencing haircuts and all those things with their mutual funds and all those things. It's giving people PTSD, post-traumatic stress disorder. Like when they hear investment, they are shaking. They are shaking. Please, yes, the past is gone. If you keep it from, like, if you let people lost money in men's gold, lost money in DKM, now you have learned your lessons. Ask the right questions. Diversify. Don't put all your eggs in one basket. Shake off the dust and move on. Don't say that as for me, dear, I'll never invest again. I'll never invest again. Please, please heal. Go and do therapy and please heal. Thank you. And then also ignoring inflation. Like, inflation really erodes the value of your money, right? So when you are investing, you need to be mindful of inflation. Like right now, inflation currently, last month inflation, maybe I'm wrong, but I think it was around 13%. It's come down. But at the time when inflation was around 50 something percent, so when we were going to that hyperinflation, treasury bill rate was around 20 something percent, right? Interest rate was around 20%. Even right now, inflation is higher than interest rate. Okay, inflation is higher than interest rate. So you realize that even though you are investing, if you are buying treasury bills alone, you are not necessarily beating inflation. Okay, so you need to be mindful of these things so that you are diverse. You are adding yes, you bought treasury bill, but treasury bill alone is not going to help you beat inflation. It means that you need to look at other investment structures that could give you returns higher than inflation so that you beat inflation. Yeah, so I mean that sums up our session. Yes, are there any questions? I mean, I hope this has been helpful. I will pause here for now. Let me keep it on a nice picture page so that if you don't follow us, please follow us. What life insurance will you recommend? Please don't be, I'll be very diplomatic. I will not recommend a life insurance. What I can do for you is to tell you that what we can do is to probably link you to a life planner, our life planners that we use, and then they can speak to you. This is a person I would share with you. We can share that with you, the contact with you. This is a person who is not who is a life planner. So then based on your needs or your individual assessment, they would recommend a life policy for you. I hope that helps. Mimi, I don't know if you want to answer that or you have anything to add to that, but yes, are there any questions? There was a question about the stock market. I would go try and scroll up. I can't find it. But over to the
found
host.
it. I don't know if you can see
And
it.
what? So
Let me read it for you if you can
okay.
find it. Okay, so she's asking, please, for the stock investments, are you guaranteed financial safety when you invest in the big companies such as MTN, Apple, and other companies like that?
No. So the stock market, is important to understand that the companies work in an economy, okay? So they are affected by things within the economy. So yes, right now MTN is good, right? And so it would appear that it's less risky. But what if a new telco comes and disrupts the business, right? And what if government starts penalizing MTN for, certain things and then like their profit margin? It would affect the stock price. Yes, in a way, there are some companies that have been in, like, fundamentally, you can say that they are less riskier than growth companies. But as I said, it's important to diversify. So there's a company like Coca-Cola, right? I don't think it's necessarily going to go away anytime soon, or even Apple, but it doesn't absorb it from short-term shocks. Okay, it doesn't absorb it from short-term shocks. So even right, Apple, I think prices have been down over there because people are saying that they are behind on the AI war and all those things. So in temporarily, you realize that, or in the short term, you realize that their stock prices did. But in the long term, the once you believe in the business idea of the company, yes, for the long term, you can see them as like good companies that you can hold shares in. I hope that answers the question. Someone says, I want to know, I saw something about IC liquidity. Okay, I don't know. The chat's up. Okay, please, I want to know how risky the IC liquidity fund is. IC is my competitor, but I'll try and be. So the IC liquidity is a money market mutual fund. So what they invest in, that's the name implies, liquidity. So it's supposed to be low risk. This is not investment advice, but it's supposed to be low risk. So what they invest in is in treasury bills, fixed deposits, repos. And so before you invest in what will be good for you is to look at the fund fact sheet. Every mutual fund has a fund fact sheet. It shows you the details of the fund, who the fund manager is, the performance of the fund. Okay, and then you can make your investment decisions on, but it is a money market fund, so meaning that it's supposed to be less riskier. Okay, because of the type of investments that is does. How can I get your contacts? Please, we have it on our screen. Put it in the slide show. It wasn't in slideshow. Please, what's the meaning of 100 shares investments? I'm not Benedict, I'm not quite sure I understand, but so what I said was that when you have shares of a company, right, you are buying, so think of it as pizza, okay, the box of pizza is the company, okay, and then the slices of the pizza are the shares of the company. Once you buy a slice, you are a shareholder of the company. You can decide to buy just one slice or 100 slices or 200 slices of the company shares. So if you have 100 shares of the company, that you no longer, if you go and buy 100 shares of MTN today, it will cost you about one share is 3 cedis 88 pesos. So 3 cedis 88 pesos times 100. That would be how much? 380. Is my math correct? 388 cedis, right? 3.88 times 100. Yes, 388. But once you spend that 388, you no longer have 388 shares of MTN. On a daily basis, as the price of MTN goes upward, that is how the value of it will be the number of shares you have times the price of the share at every time. I hope that answers the question. I don't know. Says, how does dollar cost reviews compared to it? So how does dollar cost average reduce the impacts of the market volatility compared to investing in a lump sum? So when you invest at a lump sum, you were going in. So imagine that I mentioned that I bought MTN in May around 3 cedi 55 pesos. Assuming I just went in a lump sum, in a lump sum at 3 cedis 55 pesos. Okay. And then MTN and I 3 cedis 55 pesos, and that was all my money, and I don't buy again. When MTN drops to 2 cedis, right, and I buy additional more at 2 cedis, you realize that now at 2 cedis, I'll own more shares than I will get more shares than I did when I bought it at 3 cedis 55 pesos. So because I now have more shares, you realize that even the average cost per share has reduced. It's no longer 3 cedis 55 pesos, but it would now be lower. It will be around 2 cedis 80 pesos or just around 3 cedis. So as the market continues, you take advantage of when the market goes down or the stock price, because it's not predictable. When the stock prices go down, you still buy. When the stock prices goes up, you still buy, because especially if you are buying in a good company that you are investing for the long term, and it has like strong fundamentals. So that's how you use dollar cost averaging to take advantage. Because it's not just a once, because if you just buy a one time and then you are not liquid and then the prices drop. Anytime the prices drop, there's a dip. We say buy the dip. That's if it's a good company. It's an opportunity for you to. It's like the thing is now on discount or it's on sale, right? So it's an opportunity for you to take advantage and buy more. I hope that helps. I've seen something. Sorry, I don't know if someone can help me with the question, but it keeps when you invest. Okay, when you invest in a stock like the S&P 500, is it the same as buying shares of each of the companies? If so, will the dividends be taxed since it's an international stock? So S&P 500 is the S&P 500 itself is just a list, right? But there are fund managers that have created funds that have like that mimic or mirror the S&P 500. So that particular fund, let me use an example. One of such funds, popular fund, is VU, Vanguard S&P 500 ETF. So that Vanguard S&P 500 ETF, if you invest in it, it means that automatically you are exposed to all the 500 companies. But it's one stock, okay? So the dividend, when all the 500, the ones that, not all of them pay dividends. The ones that pay dividend, when they pay the dividend, like, so the ETF actually pays. So you have like the dividend for the ETF because it's a product, okay? It's like a fund. The dividend for the ETF, yes, whatever dividend comes from it, it's taxed at the 30%. That 30% goes to the government of the US. It doesn't come to Ghana. So yes, if you are investing in the stock market, US, you have to be, and you are going especially for dividend stocks, you have to be mindful of the dividend tax. But beyond the dividends, for companies that don't pay dividend, I mean, there are some companies that don't pay dividend. They reinvest the money into the company. Nvidia doesn't pay dividend because they say they are still growing. Amazon doesn't pay dividend. They say they are still growing. So those ones, there's no tax on even the capital. When you sell your shares, there's no tax even on the capital gain. I hope that helps. You said, you said, I saw something. Please, you said the IC liquidity is your competitor. Are there alternatives? Oh, yes, there are so many alternatives. There's Fidelity Money Market Trust. There are so many. There's when you go to annual reports Ghana.com or something, annual reports Ghana, right? And you go to, I can share my screen briefly and then we can look at it. If you are fine with that. I just want to take you to a website that you can see all the list of the mutual funds, if that's okay.
Yes, please. We have time for that.
Okay, let me do that then. Let me share my screen. Okay. Okay. So annual reports. Okay. Please confirm you can see annual reports Ghana. Make sure. Can someone please confirm for me?
Yes, we can see.
Yes or no?
Yes, I can see from my side. Please, if you can see,
Okay,
please.
great. Yeah, so when you come to this site, right, and you come to collective investment schemes, okay, then you see, I mean, all of them are here. If you look at the latest market data, okay, you see, this is as at June 2025. These are all the mutual funds that have been licensed in Ghana. You see, so you have the money market mutual funds, all of them are there. You see the performance, okay. You see their size, their performance, all of them are there. So you have money market mutual funds, you have fixed income mutual funds, you have the equity mutual funds, you have the balance fund. So the name of the fund or the trust is there, the investment house is there, the start date, the AUM is the size, right? The year to date return, that is from the beginning of January to 30th of June. This was the return. This is the allocation. It means that 50, this equity percentage that is in equity, that is in the stock market, and then the percentage that is in fixed income. Okay, so this is it. So you can come here and then, I mean, the list is here for you. So the alternatives you are looking for are here. So once you find whatever alternative, you can go to their individual websites and then you can see the fund fact sheet, or yeah, you can go to, yes, as I said, you can go to their individual websites and then you can see their fund fact sheets there. If you want to see their prospectus, everything too is on this website. So you can use this resource. I hope this has been helpful. Thank you.
Thank you so much.
Mimi has her hand up.
Okay. I think Madam Mimi has something to say.
Yeah, so with the mutual funds as well, if you're using an annual report, be careful not to just choose a fund because of the return you see. Because the way mutual funds work today, this fund, in fact, one of the mutual funds that was doing very well last year is in negatives now because they had some dollar exposure. So proceed like has been advised to the what do you call a fund fact sheet and check the asset allocation. What is the fund invested in? Basically, that's what you need to be interested in and how that aligns with your strategy. If it doesn't align, then you keep looking till you get something. Of course, the other things that come to play, like if you're looking for something that is more liquid, you need to ask questions beyond what you're seeing on the website, like how long does it take to have access to your money, etc. So that's just to add. With the life insurance bit, you can, with the way life insurance is, of course, just like the investment companies, you can do your research. There are a lot of companies out there that provide life insurance. With life insurance, unlike property insurance, you are not limited to one insurance company. So you can do with a couple, because some of the insurance companies have a cap for their mass market. So you can do with a number of companies, but some of the interesting companies, do your own due diligence, by the way. Enterprise is the Prudential, Hollard. Do your own due diligence. If you know people that have had insurance with these companies and have had to claim, ask questions. How long does it take? Read the fine print, read the policy document, and make sure the way insurance is. A lot of us, myself included, sign without reading those long things, and it's very important that we get to know what we are in for. You can go if when you're in doubt, you can use a brokerage. So with the brokerages, they are independent. They sell for a number of companies. Of course, I'm sure some may be more biased towards some companies than others, but they tend to be a bit more independent and may give you some advice that's independent of a company. So you can decide to go with a brokerage. If you get a good brokerage, you can decide to go with them if you still don't know how to go about looking for a good insurance provider. The person Seyram mentioned, I don't know if he's available anymore, but I'm sure if you reach out to some of the companies mentioned, they should be able to assist. Sometimes you can also, this is not the best, but sometimes you can also go to your bank and ask for the bank assurance desk. Hopefully you can get a good person to do that for you. But when in doubt, use a brokerage. They are more independent.
Okay, thank you very much. Does anyone else have any questions to ask? If you have any question, real quick, so our speakers can answer them, then we can proceed. Okay, so we can move on from that. So thank you so much, our lovely speakers, for this amazing talk. It has been very eye-opening. I, for one, am very bad with my finances, so today has been very eye-opening. I've learned so much on how to work around my finances. First, to have like a proper financial plan for, I think, short term and then long term as well. And yes, mainly avoid the common mistakes that I feel not just me, but everyone else has, such as spending too much and not saving as well. Yes. And especially now that we've learned so much about investing, it's important for us to read more on it so we can understand better and then invest properly. So thank you so much, our speakers, once again. It was amazing having you tonight here with us. And thank you so much to everyone that was able to log on and has been able to stay till the end. Thank you so much. We know it's been stressful. It's been like 2 hours, but thank you so much for staying on. So our next masterclass is scheduled for the 24th of October, 2025, which is a Wednesday. Our masterclasses are usually the last Wednesdays of each month, but then some of the dates are they occasionally vary, because such as this one, we had this month's masterclass on Wednesday, and then we had another one today. So yes, if there's a difference, if there's a change, it will be communicated. And you would know that if you follow all our social media platforms, all our pages. Make sure to check out our YouTube channel at Anijie Global Foundation, and then at Anijie Global Foundation as well on Twitter, Instagram, Instagram, Facebook, and then LinkedIn as well. So thank you so much once again, everyone. Thank you to our speakers for staying with us till the end. I think that concludes the masterclass for today. Thank you so much and have a great evening, everyone. Okay, yes, Albert has posted a link in the page, and it's a feedback form for the participants. Please do well to fill the form so our speakers will know everything you've learned and how well they did for us. So please, the link is in the page. We'll share it one more time so you can have access to it. And recording for this masterclass would also be available on YouTube. So check us out on YouTube. Please share it with anyone who has been able to join, because it's very important and would help everyone. So thank you so much. Please make sure you copy the link, fill the feedback form, and then check out the recording of this video on YouTube, and then follow us on all our social media platforms at Anijie Global Foundation. Thank you so much, everyone. Have a good night.